Hi, everybody. Welcome back. We are here with another one of your questions about work. And for those of you who are here for the first time, I'm Roy. I'm a startup investor in the future of work. And we very rarely talk about tech startup topics because, there's only a narrow set of us who care. But when we do, we talk about the ones that we think really matter. And so we've been doing this series about being a VC because a lot of people often ask, we're VCs, so they come to us, and really honored, Brian, to have you here today. So Brian is a managing partner at Kapor Capital, which has been a longstanding, both successful investor in terms of returns and advocate for good, especially inclusion, diversity, et cetera, and also plenty of other issues around the tech industry, started by the founder of the first spreadsheet I ever used, which was, Lotus 123, and his wife, who've both been forces in their own right. So Brian, really appreciate you being here. And the question we've got today is, I'm a VC. We talked about how do I find things I want to invest in? How do I decide if I want to invest a little bit? And now it's like, okay, I think I might want to do this. We were just talking about a company a minute ago that shall go unnamed. I think I want to do this. How do I figure out, we call it diligence when you're trying to confirm whether you want to do that deal or not. How does one do that? Would just love any wisdom and insights, and thank you.
Yeah. And so thanks for having me. I've been investing now for 12 years. And so I think
Longer than me. You can teach me how to do this.
to speak on the topic. And, I think good diligence, or where you find a deal, you get really excited about the deal. As you go through the diligence process, you end up being more excited about the deal. Right. And that's how hey, this is, because if you think about it, you're not investing in too many companies per year, even at the pre-seed or seed stage. And so when I'm going through diligence, I want to come out the other side really excited and really wanting to partner with this company, and most importantly, partner with the people behind the company. And so, let's jump
so hold
into
on.
it.
So let me just say, so I heard that
Yeah.
from my Series A investor when I was a founder. He's like, I meet you 3 times, and if each time I'm more excited, then I like it.
Yeah.
But if I'm starting out as a VC, I might get excited about dumb stuff. I may get excited for the wrong reasons. So there's clearly wisdom and tradecraft that goes into what you've been doing, and now you've honed that after a decade. And so maybe say a little bit more about, like, how do you figure out if you're excited? What are some of the activities you do? What's on your list? What do you do before you make an offer versus after you make an offer? Just any details of the trade, I think, will go a long way.
Of
or
course.
An example.
I would start with the people. And I think that, ideas of what they're working on is obviously really important. But we all know this, that early stage companies, some of those ideas just aren't going to work out. And the people behind the startup and the founders are kind of that first point. And so you want to make sure, I'm looking at, who are these founders? Why do they care about this problem? And why do they want to solve this problem? And I'll give an example to make it real, and a company in our portfolio. One of the companies called Numerade. And these founders had a different company called TutorCast before they started Numerade. What Numerade is think Khan Academy, but on steroids. And so every student can get help with every single question in the textbook, right? And have it 24 hours a day, Khan Academy style. And that's kind of where they started. They were obsessed about tutoring and solving this problem, but it came out of their lived experience of that tutoring is very expensive and not everybody can afford tutoring. And how do we think about dropping the cost down being one of those things? And ultimately, this is a problem that it wasn't just about this company. They've been working on this problem for 5+ years, and it was the right team to invest in. And that's the part of, when I say people and it starts with the people, that's an example of what I mean.
And so what kind of activities are you in? Is that mostly direct dialogue with those people? Because, like, the way I think about it is, my judgment about people is not good enough to meet somebody a few times and know if they're going to be good. And then, of course, it introduces all the issues of bias and all that kind of stuff. And so I'm curious, when you say it's about the people, if somebody had to imagine what you're doing to get to the bottom of those questions, are you interviewing them again and again? Like, what are you doing?
Yeah, it's asking probing questions around the why behind this idea. And so the first is, why is this an important problem for you, right? Is it personal to them? And a lot of times, I think the thing that I've now known is it is personal. They have a lived experience. They face this problem maybe themselves directly or somebody in their family. and they want to solve it. And it's not just, hey, this is a great market opportunity. I think the other is some of their background of what have they learned in the past, whether through working, whether through starting companies that didn't work out, that they've identified this problem and it's essentially big enough and it's worth solving. And so those are a couple of examples of what I'm looking for in that conversation that I'm trying to get out of the founder. And that a lot of times doesn't show up in the pitch deck, but it does show up in the storytelling that goes alongside the pitch deck.
Yeah. Yeah. I think that makes a ton of sense. I mean, one of the things I often think about with diligence is what are some of the best companies ever that would have failed that test? And I think and some of this gets to style too, where it's like different investors, you might want to back people who are personally committed to something, and some other investor may just not care, or they may think they care. But then you look at their best companies. Like, I mean, it was like Mark Zuckerberg deeply personally committed to Facebook. No, he was not. He was launching other side projects the whole way. It was a lark. He went into it deep. And then over time, now, of course, we could debate over, lots of things about Facebook, but it's clearly a good investment for the early investors. And so, and you look at Uber, one of Kapor's most successful investments, the CEO wasn't even sufficiently committed to being the CEO for him to be the CEO from the beginning. And so, but and then on the other hand, and just to talk against myself, I look at companies like Replit announced a new round yesterday, Flexport, some of the most valuable companies we've invested in, Textio, and those founders were Campus. Those founders were deeply personally like fused with it. What are some of the other things I wonder that you spend your time doing during that diligence phase? And are we talking before you've made them an offer or after you've made them an offer before you've closed?
Yeah, I'm just not a fan of making offers and then trying to figure out if you love this company or not. And
totally agreed. I mean, I think in venture, that's a sin kind of.
Yeah. And so when we say we're in, that there's no turning back.
Yeah, word is bond. I mean, I really respect that.
Yeah, we did the diligence ahead of time. I think it's the people, but there's also what are the things that you've done, right? And so, I'll give another example of a company in our portfolio, Career Karma. And if you look at the founding team, but in particular, the CEO, Ruben Harris, he wanted to help people break into tech. So that's like, hey, this is a big problem.
And he had his own story of breaking in.
And he had his own story. And so you believe it because you've lived it and you started a podcast called Breaking Into Startups. And you've been, you have blog posts about your experience. And so it wasn't this far-fetched, hey, this is the problem I'm trying to solve. And now I'm starting a company around it. He's got a bunch of examples of what he's done before that. But what I would say is that it's also the traction piece. And so even if it's small data points, those small data points help fill in the gaps of the story, right? And helps fill in the gaps of the vision of where you're going. What has been built already? How's that going? And it makes you as an investor, it makes the story more believable, right? Because I no longer have to think about how you're going to get your first 100 customers because you've got them. And so maybe I'm talking to some of those early customers and understanding their experience using a Career Karma in those early days. How did you acquire your customers, right? And so it's the background of the founders, but also there's some of it where it's just you show what you've done. And that gets, I think, for me in particular and for our fund, we're early stage. And so we know that they're not going to have all these things built out, but you can have small numbers, but they're meaningful numbers. And the question is it repeatable? Yeah. That's one of the big questions that I think
100%. I mean, I care a lot less. It's funny. Founders often think about, well, it's really different if I get to 100 customers versus 10 customers. And it's like, sometimes it is and sometimes it isn't, because how repeatable those first 10 could make the difference. And also how much they love the thing you're making, how much are they willing to pay for it? Like any signs of the extraordinary. Let me ask you an indelicate question.
Yeah, go for it.
Before we run out of time, which is a lot of times the people diligence is about other people we know in the industry and their opinions of those people, backdoor references. And I think that that's both the most valuable signal there is about people and can have an anti-diversity effect, because, who's going to be connected is a bunch of white guys is generally going to be more connected. And so we treat it as non-data as opposed to bad data if we can't get a reference. But the fact is, if we can't get a reference, figuring out if we can trust somebody takes a bunch more work. And so I'm curious, given Kapor's deep commitment to these issues, how do you think about backdoor references?
Yeah, I would say throw them out. We don't use them. And it's the same thing
Wow.
about this whole pedigree or a lot of these things that they look good on paper, or if you worked with somebody who, maybe you worked together at Google or Meta, etc. But a lot of founders haven't worked at Meta. They haven't worked
Sure.
at Google, and therefore they're not going to have those quote unquote traditional references. And so maybe they're not on the coast too, right? And so we're investing in companies that are in Tulsa, that are in Baltimore, that are in Philly, different places where, and the first time founders, and most of them are underrepresented or women, right? And so we know we're not going to get that. However, here's the thing that I think people miss is that these founders go to work and they have to almost work twice as hard to get to the metrics, twice as hard to get fundraising done. And when they do it, guess what? They take that same attitude and that same kind of hunger and the will to succeed and apply it to their business. And so when it's time, we see a bunch of companies where they raise a seed from us and it's time for the A. We know the benchmarks of where the A's are and what you'll need to get there. And we try to help them along the way. They get multiple term sheets at the Series A. Why? These are companies that were not on, I would say, traditional VC's radar, but they've done all of the hard work that justifies a great Series A. You can look at any of these companies I mentioned,
Sure.
Career Karma, Numerade, Charger Help, and they get it done. And I think that until
But I mean,
VCs,
let's take Ruben from Career Karma. He was
yeah,
super well referenced
yeah,
in the
yeah.
VC industry, right? Adored by so many people. But
Yeah.
I hear your point, which is you think that data is more harmful than helpful.
I
And
think it's
therefore
more
we aren't
harmful,
growing
and I
enough.
think it's
And
filled
I've
with
seen tons
bias.
of cases where it helps a lot and where it hurts a
Yeah.
lot, rather. No, where
Yeah.
like the person's like, I think this guy is terrible. And actually, like, no, he's just not a good coworker at a big company.
Yeah, yeah. And so it's interesting, but let's start Ruben or Career Karma out of the
Yeah.
data set. Countless founders who are first-time founders, they just don't have those networks. And guess what? That was never a prereq to start a company, right? The prereq to start a company was you have an idea worth solving, and hopefully that's an impact-led company or gap-closing company. And those are the ones that we love to work with. And I think they continue to prove that they belong in the game, and they belong, and they deserve funding. And we're one of those funds that are happy to partner. And I think the thing that we've learned over time now, having done this for 10 years, is when they go out to raise a Series A and a Series B, most times those funds are not traditional or impact funds. And so we know that they have to meet the bar of what the venture capital industry has set, and they continue to do it. And that's what we wake up every day and get excited to do.
I think that's really powerful. Anything else that you feel like you want to hit on in terms of diligence? I mean, we haven't talked about things like financial model review.
Yeah, I will say, I mean, we're pre-seed seed. And so sometimes the financial modeling is going to be like how the founder thinks, less about these numbers are actually going to happen in the rare case that it does happen. But I think the one big thing that I would mention is you really want to think about the vision. And startups, there's many hard parts about startups. And you know this, Roy, for the listeners, one of the hard things is that you can only do essentially your seed round objectives in your seed round. And so, yes, you want to have a vision for a company that's going to go public, but you've got seed round capital at this point, and you've got to have a seed round plan at this point.
Yeah, totally.
And seed round
100%.
goals.
I think vision confusion, vision pollution is a thing that fucks up a lot of founders because they're like, here's my vision. And it's like, okay, but right now the person is not buying it from you because you're remaking the nature of the marketplace for X. They just want something that's going to make their day a little bit better. Exactly. And you can have that vision in mind, but the vision also can expand as you walk the path.
Yep. And I think it's hard to do where you explain this really big vision, but I'm going to take you down, to where we are today and where we're going and how to explain that. And here's where I'll be
call
at the
meat and potatoes problems, basically, it's like all that kind of stuff.
And then you get an evaluation and all the other stuff, which will probably run out of time.
Yeah. And I mean, I think that's about whether you want to, so we think about this is there any price at which we want to do this deal? And that's really diligence is that. And there is some diligence that happens after the offer. Like we do a background check and we tell people stuff comes up and that's not the end of the world. But when stuff comes up, it's always a conversation. And we've had a couple of cases where we passed because we felt after stuff came up, the person was dishonest with us. And then it's like, well, I can't trust you. I got to figure out if I can trust you. And you know, calling customers is something we tend to do very late in the process because it's an expensive
Same.
ask for the founder. We sometimes call industry experts and ask their opinion, but A, we don't want to share anything confidential about the company without the founder's consent. And B,
Yep.
industry expert opinions always want to protect the status quo, almost always, whether they think that. Nobody believes they want to protect the status quo, but their opinions seem to suggest that they must, because,
Yep.
you know, it's like, well, what could work? It's like, I can't think of anything. It's like, all right, cool. You're not a founder, you know?
Yeah.
But also,
And
but really helpful.
I'll add one other thing, which is,
yeah, please.
I think in going through the valuation and that negotiation, that also sets up this framework for how is this relationship going to be working with this founder. You know, sometimes, look, not
Totally.
like you might come in and the company's thinking, hey, we belong at a $20 million valuation. And you're looking at it and saying, I was thinking more of 10. And seeing how you go through that process to reach a number
Totally.
and reach a number that everybody feels good about, I think is that first exercise of, hey, this is a partnership and we
very
both
well
need to
put. I mean, I think that's very well put. I think that there's a way in which the investment process is a microcosm for the post-investment process, and it never gets better after. Like conflict that happens, it can get worse, but I've never seen it get better. You know, somebody who's like flaky, and it goes both ways, right? Like an investor who like doesn't meet their commitments, they're not going to start meeting their commitments after they invested. Like that doesn't happen.
No,
and also different personalities. Like I can be very blunt, and some people love it, some people hate it. You know, it's like, but I'd rather they learn that during the investment process. So I do think there's a part of it in a way. I guess what I'm trying to say is that part of diligence is also honest disclosure / marketing about what your firm is like, because they're going to choose you as well during that process. And obviously the best founders are going to be choosing, you know, the most. So, all right. Any parting thoughts before we wrap?
No, I think start with the people, focus on the people, and we're all trying to make a difference in this world. And that starts with
it's good insight. Really deeply appreciated. Different, obviously, ways of going about things. We talked about things like backdoor references. And then, you know, for folks who are watching for the first time, the reason we call this is not advice, because we don't know what you should do. You want to be a VC and get to yes, you figure out your own stuff. But Brian's sharing his perspective based on more than a decade of experience at a firm that is one of the most financially and otherwise impactful, successful firms. I'm sharing my experience from Bloomberg Beta, and we all just figure it out together. So to be continued.
Exactly. Thanks for having me.
Thanks, Brian.
Take care.